should focus and talk about what's happening in the entire startup as well as entrepreneurial ecosystem. We have with us the OG talking in terms of what that space is looking like, Sanjeev Bikhchandani in conversation with Avan Dubash.
India is a young country. Look at the demographics. It is also true that if you, in my area of operation, that is entrepreneurship and startups, many of the startups are done by young people, younger than 30, younger than 35. And it is those startups that will be giant companies of tomorrow. And that is what will take India ahead. So I completely agree that, it is the youth who are central to India's progress.
Would there be some sort of a wish list when it comes to the startup ecosystem? Because yes, there has been a lot of government support for the startup ecosystem, be it, the ease of starting a business in India, easing regulations, as well as access to newer technologies. But what more do you believe that the government needs to do?
Look, policy pronouncements from the government come through the year, not just the budget. But, budget is one more occasion to do stuff. So we are hoping that, the angel tax gets eased out. We are hoping that there is some sort of incentive for investors to invest in VC funds and startups. And there, because really what we need is the domestic venture capital industry, domestic investments into startups, risk capital, that gets a fillip. So stuff in this area would be useful.
Do you think that strategic budget allocation will play a strategic role, maybe streamlining of IPO processes to boost investor confidence? Is that something that you would like to see in the budget, Mr. Bikhchandani?
Look, I think the IPO processes are fairly streamlined, and we have seen a number of IPOs in the last 2 or 3 years from new age tech companies. Now, several of them are doing well, some of them are not. But that's a market condition. So I'm not sure we need any change in the domestic IPO processes at all. Already we are seeing that those who have flipped to go overseas are finding they can't list overseas. Many of them are coming back to India to list. They want to flip back. Maybe if flipping back could be made easier, I think that would help a lot, because a number of people who flipped overseas want to flip back, but there are the tax implications of that are fairly onerous. So if something is done around there, we can launch some sort of Ghar Wapsi scheme to get flipped startups back home.
You've gone ahead and said that there is no funding winter when it comes to good companies, and there never was. So how would you read into the overall sentiment in the startup ecosystem right now?
I think 2024 will be more of the same. Investors are more discerning. Investors are more cautious. Investors are taking their time. Investors are evaluating things thoroughly before investing. Valuations are more real. And the velocity of investments has slowed down, but investments continue. So really, you've got to get your company into a position where investors want to invest. And for that, you've got to focus on cash flow, revenue, profit, repeat business, execution rather than overspending. Those are all the conventional businesses, the way conventional businesses are run. You've got to migrate to that.
Given that you were one of the early investors into Zomato, what's your thoughts on how the company has shaped up, especially in light of the fact that this year we're anticipating the number 2 Swiggy to list?
I don't know the Swiggy numbers precisely. When they, I guess, file the DRHP, things will be clearer. But Swiggy is a good company. I think we respect it. Our understanding is that it is number 2 to Zomato. And really, having a second listing will also help investors benchmark 1 and 2. And that's always good.
Right. Okay. So benchmarking these companies, and given the fact that we have seen the cash burning cycle reduced to a great extent, companies are becoming a lot more cognizant when it comes to accountability and profitability. What's your analysis of how investors are now approaching these companies?
I think most companies now have understood, and investors have understood that whether you're listed or unlisted, eventually you will be valued of a profit multiple. And money is not unlimited, right? So if you want to get more and more rounds of money, you better be progressing towards profit and better unit economics pretty quickly. So I think that fundamental understanding has sunk into to founders.
You've gone on record to say that 4B Networks, which was the prop tech venture that was founded by Rahul Yadav, was one of the mistakes. I just want to understand from you, are there any major signals, indicators, or red flags that emerge in conversations with founders that you know that it is going to potentially be a problem?
The importance of good governance has been re-emphasized. We have always stood for it. We have always been very careful. You do make mistakes. And I have publicly acknowledged in our analyst call a couple of quarters ago that yes, investment in 4B networks was a mistake. And we accept it and we learn and we move on.